NRIs, you can collectively earn up to 1.5 lakh crores in 2025 by just investing in India. With Indian stocks up by 10%, mutual funds yielding 18 to 20% annually, and GIFT City offering tax-free gains, the potential is massive. But here's the problem: 70% of NRIs miss out due to confusion excess. So today I'm breaking down every option with real data and showing you exactly how to start. Let's dive in. Hey everyone, welcome back to SBNRI, and if you are new here, I'm Mohini and we talk about NRI finances, investments and building wealth across borders. Do you know Indian banks are holding over 140 billion in NRI deposits? And that's 4% of India's 3.5 trillion GDP in 2025. The opportunities are huge. From 7 to 8% fixed deposits to startup investments with 10x returns. There's something for every budget and risk level. So today we are covering all your options. Whether you have 5,000 or 50 lakhs, this video will help you decide where to start. And if you are serious about investing, watch till the end for the easiest way to get started. Hit subscribe and let's get into it. So first, let's understand why should you invest in India in 2025. Is it even worth it? The paperwork can be annoying, terminology confusing and taxes tricky. I get it, but here's why you should still consider it. Number 1, growth potential. India's GDP grew 6.4% in 2025, outpacing the US 2.5% and Europe's 1.2%. The Nifty 50 index has delivered a 14% average annual return over the last decade, beating the S&P 500's 10%. Number 2, real diversification. 30% of S&P 500 is tied to just 8 tech giants. But India offers manufacturing that is 4.3% growth in 2025, pharma exporting $30 billion, banking and infrastructure, they all have true diversification. And number 3 is home advantage. You know India's brands and markets, but foreign investors can't invest directly. NRIs have a 1.5 trillion investment opportunity here. So let's jump into your options. Starting with the basics, that is fixed deposits. NRI fixed deposits offer 7 to 8% interest. Example, 10 lakh earns 80,000 yearly. But with the rupee depreciating 5.8% annually, real returns drop to 1 to 2%. Plus, the US taxes this interest at 30% for some NRIs. That's where FCNR deposits shine. Deposits in dollars earn 5 to 6%, that is better than 4% from a US bank, and get dollars back at maturity, protecting you from a 5.8% rupee drop in 2025. Ideal for NRIs with $10,000 to park. Next up is mutual funds, and this is where it gets exciting. Mutual funds pool your money with others, managed by pros. In 2025, India's mutual fund assets hit 72 trillion, with equity funds averaging 20% returns. Here are the types you can invest in. Equity mutual funds. 70 to 100% in stocks, 18 to 20% average returns over 5 years. They have higher risk, greater if you are under 30s or 40s. Next come debt mutual funds. 80% in bonds, 6 to 7% returns you will get, but they are less risky than equity funds. Again comes the hybrid funds, 50-50 equity and debt, 10 to 12% returns, balanced. So as an NRI, use NRI NRO accounts. Start with index funds tracking Nifty 50 or Sensex like ICICI, HDFC or Kotak are solid picks. Long-term equity gains are taxed at 12.5% in India after 1 year versus 20% in the US. Sectoral funds, example pharma, was up by 18% in 2025. They are riskier but targeted. Stick to diversified fund for beginners. So if you are an NRI wanting to invest in mutual funds, use SBNRI. We offer paperless onboarding, online KYC and access to top funds with more than 15 to 18% returns. And dedicated wealth managers handle cross-border needs. No document hassles, just start online. Check out SBNRI for a seamless experience. Download the app from the link. Now let's move on. Direct stocks investing via NRI Demat account is simple. I know picking stocks is tough, but curated baskets let you buy 10 stocks with one click, averaging 14% returns. Risk is real, so research or use expert portfolios. Now let's talk about GIFT City, and this is one of the most exciting developments for NRI investors. Let me tell you, GIFT City stands for Gujarat International Finance Tech City. Think of it as India's own offshore financial hub, like Singapore or Dubai. Here's what makes GIFT City special. Number one, you invest in US dollars directly, no currency conversion hassles. Number two, the money is fully repatriable. You can take it out whenever you want. Number three, it's not taxed in India, zero Indian tax on your gains. And number four, it's country agnostic. Even if you are not an Indian citizen, you can invest here. You can invest in mutual funds through GIFT City, and you can access international markets. Even invest in Indian stocks through GIFT City routes. The minimum ticket size is around $75,000. So if you want tax efficient investing with fully repatriation rights, GIFT City is a game changer option for you. Let's talk about even bigger investments, portfolio management service, and we often call it PMS. In this scheme, someone manages your portfolio actively. Minimum amount is 50 lakh rupees and around $60,000. Then buy and sell on your behalf based on market conditions. Next come is AIFs, and we often call it alternate investment funds. Minimum requirement is 1 crore. These invest in pre-IPO shares, private equity, structured deals. These are highly risky and best if you are investing for long term. But your money needs patience here. And the last one is startup investments. So startups offer high stakes. Even Indian startup ecosystem raised by $12.5 billion in 2025 with 124 unicorns. But 80% failed. Spread 25 lakhs across 10 to 15 via angel list for diversification. The India-US corridor is hot. Use compliant channels. Now the last option is gold and real estate. Quick note on gold, go digital, buy gold ETFs, skip physical jewelry with its making charge and storage hassles. And real estate, only buy if you're moving back eventually. Loans in India cost 8% versus 4% abroad. Rental income often doesn't cover AMI. Consider opportunity cost before buying. And here's the common mistake every NRI make. Mistake 1. NRE doesn't auto-open, so open it manually. NRO has a 1 million yearly repatriation limits. Mistake 2. Selling NRE properties send proceeds to NRO with 30% TDS and $1 million cap size. Mistake 3. FATCA reports Indian accounts to your home country. Disclose or face $10,000 fines. So if you want to experience all these investment options with proper guidance and support, reach out to SBNRI. We handle everything from mutual funds to GIFT City funds to PMS, and all with dedicated support for NRIs. The India growth story is real, the opportunities exist, you just need to be smart about it. So drop a comment below and let us know which investment option you think works best for you. Are you going with mutual funds, GIFT City? I would love to hear your thoughts. If this helped, hit that button, subscribe if you haven't already. See you in the next video.